to the Florida CME Group here in Chicago. Let's get into the zone, folks, the CMZ zone. Lots to talk about. We saw the job data come out. You know, and we're used to some manipulated numbers here in Chicago. We saw that 7.8% unemployment rate. It ticked down under 8% for the first time in 43 months. So a lot of cheering going on for that on the media, but we'll see, because at the end of the day, there still are a lot of people, about 23 million people, underemployed as well as unemployed. So that suffrage continues. However, from an economic perspective, we did see a consensus number. You know, that number came in line. We saw a pop, another leg up in the S&P. And the E-mini went to 1466. We saw Treasuries relent. I'm actually hopping on Fast Money here in a little bit to talk about this, but we're seeing this Treasury relent. Yesterday, after the FOMC minutes, they hit the Treasuries. Today, again, the long bond, the 30-year, down another point. So we are seeing these Treasuries relent. And one thing to be mindful, folks, because you don't want to catch a falling knife, we will see next week some supply hit the market, 66 billion to be specific. So in that supply situation, you should see buyers be a little bit more relaxed, because right now we're expecting this big ECB October 21st meeting to really bring it in. But folks, I know Bill Gross has talked a lot about this curve steepening, and that's where they'll be buying the front of the curve and selling the long end. So the rates at the further out of the curve are higher. That way banks can make more money. It's a more profitable situation. And I agree with him in theory. However, we are going to see a timing of this. Right now, the German Bund and the 10-year note here domestically lock in step as we look at Europe. European woes will persist. It's 2012. I think 2013, we're going to continue to see this fluctuation. So, Killer, what are we getting at here? We talked a lot here. What's the trade? Watch the TLT, folks. It's a buying and selling opportunity here. Under the 200-day moving average at 118 provided a buying opportunity back on September 14th. So now we will see this price relent. Treasuries come down, yields go up, but I'm in the camp that we will see the 190 be the high resistance on the yield and the 150 be the low yield. Now, I've talked about 119 on the low side of the Treasuries. That's a technical target. Only in the case everything in Europe kind of falls apart and we have a helter-skelter situation. That's the panic mode. But right now, I think we're still tethered. So where I do disagree with Mr. Gross, and I have the utmost respect, he is the grand poobah. I do respect and like his thoughts on the steepening trade, but I don't think it's yet. I think it's still sensitive to Europe. So that's what I got, folks. Have a great weekend. If you're going down to the Notre Dame Miami game at Soldier Field, come by. I'll buy you a beer. It's going to be an epic game. We're going to crush Miami. The U is going to get turned upside down. From the Florida CME Group, I'm the Killer. And one other thing, be the hammer, not the nail.
Gangnam Style.